Hello, everyone, and thank you for tuning in to the weekly update with Oakwood Financial Group. I'm Joshua Dobi. This is a little bit of a new format that we're trying out as part of our newsletter distribution to you during this time of COVID-19. We're not going to make these videos particularly long, especially this one as the first one. We just want you to get a feel for how it looks on your computer screen or on your phone. But we're going to be providing some pertinent information, especially as so many things are changing literally on a weekly, if not a daily basis, when we're looking at things economically and financially. So we wanted to have this avenue available to you so that in addition to the text that we're sending out to you weekly now, if you're in the middle of doing something, you just want to run this behind you, just so you can hear the audio, this is a chance for you to do that as well. Again, thank you so much for taking the time to listen and or read the weekly updates that we've been sending out to you. We want to be pertinent, and so we're going to jump right into it and talk about some of the things that have happened here, not only over the last week or so, but also over the last several weeks. I don't need to tell you that the effects of COVID-19 continue to be a very serious and very significant impact point when we're looking at things economically and financially. We have moved some off of the lows that we hit in the long equity markets on March 23rd, but now we're bouncing along a little bit, and even from a technical standpoint, we've started to pull back some from some of that recovery. Not sure where it goes from here. No way for us to be able to say that with any definitiveness, but we're watching it very closely to see what kind of long-term ramifications there may be as we're continuing to go through what we've called this price rediscovery process for so many stocks in the stock market. But a couple of points you may want to keep in mind, just as we're keeping these things out there and in front of you for the things that have been pushed through legislatively. Unemployment claims this past week, unfortunately, were another very large number, almost 3 million again, for a 6-week total, very nearly 36 million claims. So unprecedented in our history, but it's important as we're comparing it to different times in our history to realize that this is not the Great Depression, nor is it the Great Recession of 2008 and 2009. This is a public health issue which has some very significant economic impacts. So it's not due to the economy itself crumbling apart or due to companies mismanaging their businesses. This has been a mandated shutdown. So when we see those numbers, we need to keep that idea in mind as we're processing the data that are coming through. Second big item, if you're a small business owner, if you know small business owners, the P3 loans or the payroll protection loans, that program in its second iteration and second funding round continues to be moving forward. Another $250 billion plus was moved through here most recently. The number of loans that have been processed has started to slow a little bit. If you remember, the first round went through in literally just a couple of weeks. This second round, we're starting to hit not a saturation point, but some slowing down in terms of the number of applications that are coming through the system and being processed by the SBA. We anticipate at this point that the amount of funding which remains, which right now is on the realm of about $100 billion left, is going to last probably into sometime in June at this point. Always caveating those kinds of things, it may not last that long. So if you are a small business owner or if you know a small business owner, we are strongly, strongly recommending, if you believe there's even a chance that you may qualify, we encourage you to reach out to your banker, reach out to your tax advisor. You're always welcome to reach out to us at Oakwood Financial Group as well. The next round of funding has been a hot topic of conversation just relative to the next relief package that may or may not come through Congress. We certainly don't want to assume those things before they happen, but there's a lot of conversation with folks with whom we have regular interaction about what the next relief program may look like. A lot of talk about whether the states individually and municipalities individually will receive some direct funding. The House of Representatives in Washington, D.C. has actually put forth a plan where, at least at this point, and again, very early on in the process, up to $1 trillion additional would be sent out to the states and to the municipalities. We're a long way from that being passed through the Senate and signed by the president. So I don't want to offer that out there as anything other than just pure discussion point at this point, but that's one of the things that's being put out there. There's also a significant amount of discussion happening among folks about what it will look like if there is a reopening of the economy and then another need to close it due to a spike in infections or due to a spike in deaths attributable to COVID-19. Actually, here at Oakwood Financial Group, that's one of the things that we're modeling with some consistency. And admittedly, it's hard. We're obviously dealing with variables that we can't pull from a very large database historically. So we are modeling several different scenarios about what a reclosing could look like, not because we are wanting to be pessimistic at all about what comes next, but because we're wanting to be prepared. And we're wanting for you to be prepared in the event that that kind of thing would happen. So we're looking at what that looks like, again, economically and financially, internally here at Oakwood for right now. And then we'll push that out to you as we have some data which we think are more relevant. And that leads me to another big point, and you see these kinds of things happening, if not in your state, then certainly in some of our sister states around the country. We're starting to see states reopen, and it's being done on a state-by-state basis, and frankly, folks, not even on just a state-by-state basis, but within certain states, county by county. It's created a lot of confusion for folks around the country for understandable reasons. There isn't a set of rules for everybody. There isn't a set schedule for everybody. States are empowered to make those decisions and to follow the schedules that the governors and the governors' agencies deem appropriate. But it does create a lot of uncertainty, especially if you live close to a state border and maybe the state next door is beginning the opening process, but you live in a state that doesn't. Again, a lot of confusion. So what we're doing here internally at Oakwood is we're watching from a data standpoint, not only the economic impacts of those states that are beginning to open and what that means for businesses which are able to stretch out a little bit, but what that also means, of course, for the effects of any spikes in COVID-19, infections and attributable deaths to that. Really too early to know at this point. We're still gathering data. We're going to need to get to a couple, maybe several weeks in before we have data which we feel are reliable. Just want you to know that we're watching that as well as we're managing things for you on your behalf here at Oakwood Financial Group. One small item that I wanted to relate to you, and we're going to be doing this as part of our videos that we share with you on a weekly basis here. Just some things that have come through all of this legislation, which has pulsated through Congress, and my goodness, it is very difficult to be able to keep up with it and to understand what all of the ramifications are. Frankly, even from our perspective here at Oakwood, because there are so many reinterpretations and expanded interpretations coming from the Treasury Department, coming from the IRS, coming from the Small Business Association, that we are always providing a caveat in this day and age when we're offering, this is what has changed, but stay tuned, and literally as a caveat to this. So I want to just offer something to you here because it will be particularly relevant to so many of you who give so charitably. And specifically, if you haven't seen it yet, there is a provision as part of the CARES Act just for this year of 2020. So I want to be very clear about that. This is not a change in law in perpetuity, but for 2020, usually there are restrictions in terms of the amount that you can deduct from your taxable income with your charitable contributions. Depending upon what kind of entity you're using, it may be somewhere between 30% and 60% of your adjusted gross income. But for this year in 2020, as part of the CARES Act, you are actually able to, if you want to be so charitably inclined, have those charitable contributions offset up to 100% of your adjusted gross income. Let me say that again. If you're so charitably inclined, in 2020, one of the things that has been adjusted as part of the CARES Act, which passed through Congress, is that if you give enough to offset up to 100% of your adjusted gross income or your AGI, that you may literally be in a space where you have very little to no taxable income for this year. Now, again, here come the caveats. We strongly, strongly encourage you to reach out to your CPA, your tax advisor. If you are inclined to move in that direction, what we're encouraging folks to do is to coordinate with their tax advisor or their CPA to run a hypothetical return, meaning before you actually make that gift, see what it looks like relative to what your overall tax return is going to look like. That way there are no surprises. If you believe that you're doing it, but it doesn't quite work out that way at the end of the year, we strongly, again, are encouraging you to work through your CPA, work through your tax advisors, to be able to see, again, just in a hypothetical way, if you would give at a certain level, how much of your income could you offset because of this one-time, this year provision that has come through relative to charitable giving. So a pretty big item to keep in mind there, again, knowing so many of you folks are charitably inclined. If you had desire to do that, or if you're wanting to mitigate perhaps what for you this year will be a spike up in your adjusted gross income, and you're wanting to offset that with some charitable giving, definitely some opportunities there that haven't been there previously, and at least at this point, won't be there in succeeding years from 2020. Well, friends, thank you so much for your time. I'm going to draw to a close this particular recording of the weekly update with Oakwood Financial Group. Please, at any time, if you have questions, you'd like to chat about something, the items come up where you just want to go through things, especially in this time when things are so uncertain and we're seeing so much gyration, be it in the stock markets or economically, that's why we're here. We'd love to hear from you. Phone number wise, you're always welcome to call our offices, even though because of COVID-19, we are very often working remotely. You can still call the same phone number and reach all of us, 412-928-8801. Again, 412-928-8801. And then if you'd like to reach out to me via email, always love to hear from you as well. It's JDOBI, so J, D as in David, O, B as in boy, I, at Oakwood Financial Group, all one word, .com. That's JDOBI at oakwoodfinancialgroup.com. Friends, it has been a pleasure to spend this time with you, albeit electronically. Until the next time, I'll look forward to chatting with you soon.